You, not me.
Oh.
Let me move you up.
Oh, we're live. Nice. Hello and welcome, everyone. I mean, you're definitely, that's okay. We can, we'll figure it out.
Sorted it. You're CEO now.
Oh, nice. Hello. All right. Let me just do a quick promo on the old channel here. Alpha Impact. And then I need to find the list of questions before we actually get started because I need to see what's happening. Okay, hold on. There.
I wonder if I could make my screen smaller so that you can see our QR code behind.
How are we doing for, oh, there we go. Whoa. Now I'm the screen.
No.
Now you're the screen.
I'm still adjusting this.
Okay, well, welcome everyone. My name is Hayden. I'm the CEO and co-founder of Alpha Impact. We are just setting up. Ariel, I think we should be equally sized. I don't think it should be like me with a tiny you. Yeah, I think that's the best way to do it.
Okay.
So, fantastic. How are we doing for engagement? Normally I'm hosting, so I have the viewer numbers.
I see that we currently have 2 people watching.
Oh, fantastic.
And 2 people on the chat. We have Frostic. Frostic has been on our Telegram channels and been supporting us for quite some time.
Now, I can't type today, so I'll have to use a device to actually log in and chat. But hold on, let me just do something. Alpha Impact. Okay.
Hi, Frostic. Hi, Amanda.
All right.
Hello.
Frostic, thank you very much. I saw you were actually live streaming the Antler Demo Day pitch today. So that's it's very, very good to have you with us. It's great to have your support. Okay.
So.
Yep.
Oh, Amanda, nice to meet you. Let me change my name to Good Girl.
There we go.
I don't know if you want to start yet, but since we only have 2 viewers, we should continue, just chatting for a bit.
Sure. Well, how about that BTC? Let's take a look at the markets.
Frostic said that your demo was interesting. I think you liked it.
Well, thank you, Frostic. Should we, Ariel, what I'll do is I'll drop you the URL for the Antler Demo Day. And you can maybe put that in the comments.
Yeah, sure. Yeah, so if anybody else would want to watch it, you can just join and click the link.
Okay. I'll send this to you on WhatsApp, Ariel. Oh, there's a private messaging here too. Oh, okay, I can send it there. There you go. I sent a private message. Okay, now I'm going to tune in and watch. Welcome to everyone who's just joined. We're here in the studio. Well, I'm here in the studio, socially distanced from my lovely colleague, Good Girl Crypto. And we are here. We are live. We're very excited to be with you this evening. We're going to be talking. What are we going to be talking about, Ariel?
We have 3 main topics that we're going to talk about today. So first, we're going to talk about the environmental issues that comes with Bitcoin, crypto mining in general, how we are having renewable energy in crypto, and what are the impact of it. And then we're going over to talk about the XRP lawsuit. I don't know if anybody else bought Ripple. I know I bought XRP, so this matters to me.
And I'm sorry for everyone who's watching. I'm going to see the YouTube with my phone so that I can actually see the comments as they roll in real time. Otherwise, I'm blind without the comments. So apologies for being distracted.
I think you can see the comments as well, Hayden.
No, I can't. It says chat is not supported for the platform. So if you're a guest, you can't see the comments. But that's okay, because
Actually, I didn't give you a guest link. I gave you a studio link.
oh, okay. Well, for some reason I can't see it. But anyway, that's okay. Oh, but I could see it last time, couldn't I?
Yeah, you were. We were both able
Oh,
to see
that's
it last
strange.
time.
Hmm.
I'll sort it out tomorrow.
Okay. Well, it's okay, because I'm actually I can't even see. Where do you see comments on YouTube Live? I'm such an old man.
If you go to our home,
You just
our channel, and then
yeah
you click our video, open on the
yeah.
sidebar, either to the right or on the bottom, you'll be able to see that.
Oh,
It's to the right.
wait. Is it the gear icon? No.
No, that's settings.
So what am I looking for?
Okay, here, I'll send you a screenshot.
Okay, this is what it's like working with an old person from Ariel's perspective.
Don't
I'm at
believe
least in
me,
my
he's
30s.
32.
I'm 35.
I guess, sorry, 35.
Super
Oh,
old.
he's 32.
That's okay. I think you have some feedback. Is it you?
Yes, that's me. Sorry. I was just trying to screenshot the YouTube page for you.
I have the YouTube page. I know I found it. I'm streaming from my phone.
But the comments, are you able to see the comments?
No, I'm not. Anyway. Let me just try.
You know what? Anytime there's a comment, I'll just read it out to you.
I could try from my browser. I just have to have the volume off. Work. It might implode.
We now have 8 viewers watching us. So, hi everybody.
Hello and welcome.
Join us.
This is Crypto Thursday. Okay, I am watching. Can you still hear me?
Yeah.
Okay, cool. So I actually did get it working on a separate browser. Wow, this is maximum narcissism here. I have the in front of me we're recording, and over here I can watch myself. So I can now see the comments. Wow. Okay. Cool. All I need is now a third monitor. So I'll show everyone what I'm looking at. We've got this, and then this. So it's craziness. Okay. Cool. Let's jump straight into it. So do you hold on? I need to now find my browser. So do we want to talk about the format for the evening?
Yeah. So it is going to start off. We're going to start off talking about the green renewable Bitcoin mining and the impact of it. And then we're going to move on to XRP and its lawsuits. And we're going to end off with why corporations are holding crypto and holding Bitcoin. And Amanda on YouTube, she says, can't wait to hear why SpaceX is holding Bitcoin.
Well, they're going to the moon, clearly. Clearly, it's the only reason. Okay, and then just I think a quick note. So you're going to have some questions for me, and then at any time, if anyone wants to jump in, they can ask questions or make comments. Or so I think we should ask our kind of studio audience about the studio audience. They're actually a home audience. They're not a studio audience. We should ask our audience. So when you ask me questions, then ask the audience as well. I think that's a good way to do it.
Okay, absolutely.
Awesome. Okay, so what's up first? I'll pass over back to you, and I'll be quiet until asked a question.
Well, okay. I'm not sure which one our guest would like to hear first, but I'm going to start off with what I'm very interested to hear about is what's up with the renewable energy and crypto mining. So China recently just culled all of their crypto mining, and this created, a huge impact on the industry. Can you tell me a little bit more about it?
Yeah, absolutely. So in I guess 2013, China started passing laws saying that you couldn't own crypto, couldn't sell crypto, couldn't buy crypto, couldn't run a crypto exchange. All of these things were kind of the news in 2013. And in 2017, they actually came out and said those same things. I think there's some feedback. Is one of your devices streaming audio? I had some feedback. Is it better now?
I didn't hear any feedback from your.
Okay. But do you have two devices that are like, is one of your devices playing audio and the other one is recording?
Me? On my
Yeah.
end, no. I thought you were
okay.
talking to people in the office.
No, I was talking to you, sorry. Okay, cool. So the news is that the Chinese government has these rules in place that started in 2013. They kind of reiterated those same rules in 2017, and they've reiterated basically the same rules. So there hasn't been a lot of change, but the Chinese government has amplified the that same message that they've been doing since. Okay, hold on, there's feedback. I'm just gonna kill one of those. So the most recent impact has been that the, are you using headphones, Ariel?
No, I'm not. I'm just speaking out loud in a room.
Okay. That might be the cause of the feedback.
Oh, okay. Give me a second. Let me mute
Okay.
myself while you continue.
Yeah, just try that. Just try that for a second, and then we'll see. Okay, so, oh yeah, that was definitely the issue. Okay, cool. So thank you everyone for your patience. We're learning. So the Chinese government in 2013 and 17 passed some laws against Bitcoin ownership. This time around, what they did initially starting in May was, or in April, I guess, was to start warning consumers that owning or buying crypto is something that they should not do. And then they followed up and they actually said that, hey, if you own, then they started going after the banks that were providing banking services to people. And they were saying to the banks, you need to stop providing payment services for people who are doing this crypto. So that was the kind of start. And then they went one step further and they started penalizing the Bitcoin miners. So they passed a series of laws saying that you can no longer mine Bitcoin. And what that's caused is it's caused and it was something like 51 or 56% of all the mining hash power in the world was concentrated in China. So the people physically making the Bitcoins, using all this electricity, were in China. And so what happened is that they said, you can't do that anymore. So we saw a massive decrease in the volume of hash power, which is what we use to describe the amount of energy going towards mining Bitcoin. And so we saw that drop occur in, I guess, when would it have been? Over the May-June period. And so as a result, the mining dropped off. And so this was a sign that Bitcoin was, maybe not the best thing to invest in for a lot of folks. So we've been obviously very bullish, but the prices has dropped by over 50% at this point. So I guess we're now at like 31,000. So it's slightly more than a 50% drop, which is not uncommon for crypto. So that's the kind of start of the saga, Ariel. It was the announcement that mining in China could not continue. And so all these miners had to then leave China and find places to mine crypto elsewhere in the world. You're still muted, Ariel.
Let me know if you receive any feedback still.
No, it sounds much better. Thanks.
Okay. So I'm quite curious about what you just said about how the government created all these bans and they did several waves of this already. But, 50% of the mining actually comes from China. So who benefits from this culling of mining?
Well, when you look at it from top to bottom, it's actually it's about a 50% drop in mining power that occurred between, it looks like July, from the very top, May 15th to July 3rd. So what that means is that the amount of mining that was occurring across the whole world on all Bitcoin has decreasing in that time. And we typically see these events when we're in such a high bear market, or such a high bull market that it's no longer profitable to mine anymore. Mm-hmm. But in this case, I think all of us benefit because the whole point of crypto and Bitcoin is that it's decentralized. And so when you have 50+% of your mining participants in one country, that's not really decentralized. And so what's happening now, we're starting to see, so there's been I'm just looking at the chart. It looks like, so we've gone from 84 to it looks like 100 and something. So it's about what, 20% recovery so far from the very bottom. So what this means is that this hash power, or these miners that are online, are actually relocating to other parts of the world. They're going to Kazakhstan, they're going to Mongolia, they're going to Canada, my home, and other places, Norway, certainly among them. So it's actually beneficial, I think, for the ecosystem to have a decentralized base of miners. It's no longer mostly contained within China.
Okay, so the intention, what's the intent? Are you saying that the intention from China?
So I'm just going to close the door.
Sure.
The intention, sorry, I'm still here. I'm just, so the intention from China was to discourage participants and people from owning crypto. So the idea was that crypto is potentially a way for Chinese people to get money out of China. And for those in the economic space, you'll be aware, or anyone with relatives in China, you'll be aware that there are major capital controls. You're not allowed to bring a lot of money outside of China. There's a very cumbersome process involved in taking money outside of China. So the Bitcoin is a beautiful tool to move assets freely across the world because there's no bank that the Chinese government can sanction. So that's the kind of the thinking behind why China has cracked down so hard on Bitcoin ownership, and that was kind of the reason why it kicked it off.
Oh, okay, I understand. So from this, who do you think would be the most affected by it now?
Well, I think we have the most affected. I mean, I think that most of the pricing, most of the action is now priced in. I don't think there's much China could do that they haven't already done. So I would say, if you're a speculator waiting on the sidelines, there's lots of other sources of potential bad news, but I would say that this one is already priced in. So, and certainly, looking at the options market, there's a fair amount of, there's considerably less optimism than there was recently. So from my perspective, we all benefit, and what we need to do is just keep watching. And I mean, Bitcoin shouldn't be dominated by China or Elon Musk or anyone else. Unfortunately, it's still susceptible to the news. So as it grows from something that's on the fringe into something on the mainstream, then I think we're all going to be watching and waiting.
Okay, I think actually a lot of other miners who still remain, who are not in China, are getting better, more profitable miners right now, right? Because they've lost 50% of the competition.
Well, that's exactly what's happened. Yeah. And, when hash rate goes down, difficulty goes down. And I won't show charts because I don't think that's the real purpose of this. Oh, wait, can I show charts? I think I can.
I think you can share your screen.
Okay. It's okay. The difficulty has gone down from about 50% as well. So what that means is anyone who's mining Bitcoin who is not in China and doesn't have to turn off their machines can now do so twice as profitably as they could have several months ago. So that in my mind means that Bitcoin miners could theoretically be producing somewhere around $10,000 per BTC. So they're still mining at a profit. So that's been the development for the rest of the miners.
Oh, Frostech actually asks if you experienced mining before, and is it too late to start mining?
Well, mining Bitcoin. Okay. Firstly, I'm not an expert on mining infrastructure or anything hardware related or anything software related. I have a whole team of super smart people building software. I'm just the one who's, I'm not the builder. I'll say that as well. But I've not experienced mining Bitcoin. No, it's definitely too late to. Well, Frostech, it depends on your budget. If your budget is 50 to 60 million plus, then absolutely, it's a great time to get into Bitcoin mining. If your budget is anything below that, you've missed the boat on Bitcoin. There's other currencies you can mine. I don't have a lot of insight into, there's all these mining websites you can go to find where you can mine the most profitably. I would say that the core input cost of mining is always electricity, and you need to be mindful of where are you getting this electricity from? There was a news story recently, I'm sure you saw, where the police in the UK found this farm that was using so much electricity they thought it was a marijuana growing operation.
Oh, I've heard that. Yes.
Yeah, or what we commonly refer to in the press in Canada as a grow op. I don't know why in Canada we have so many, but anyway, there was this grow op happening in the UK, or so the police thought, and then they actually showed up and they they found out it was someone mining Bitcoin. They were still stealing electricity, but they were not growing drugs. They were in fact mining crypto. So definitely too late. Frostic, I think you can search. Let me find some more details. Get someone from the mining community in for a future podcast.
Also, a new person joined, Max. Hi, Max. He's saying hi to the community.
Welcome, namaste.
So I also just want to quickly add to it. I'm not an expert like Hayden, but I think because of the lack of miners now, in fact, the prices of NVIDIA and all their graphics cards have also dipped, so it's very cheap to buy miners. I don't know if that adds to your profitability, but it would definitely count.
Yeah, I mean, it's the efficiency of mining has been has changed over the past years, and it used to be an arms race. And you know what you saw in 2018, the prices of crypto assets collapsed, but the hash rate just kept increasing until about December, which actually shows you that the mining game at that time was not at kind of peak efficiency, whereas now ASICs are using 8 nanometer chips, which are the same type of chips we use in our cell phones. So they've kind of, the crypto mining and graphic processing industry has caught up to basically every other industry. Yeah, so it's the efficiency gains will be slower from here on out.
So, okay, Max asks a very important question. Why would people relocate to Canada, Mongolia, and all these places for mining? Like, why these countries?
So people relocate because they can typically strike a deal with some energy producer, and it's typically, I know we always talk about, or Elon Musk and all his buddies talk about Bitcoin being a big energy consumer, but the reason that they do this is because they can. There's a lot of places where they can. Okay, hold on. I'm loading another browser so I can look at the comments as well. So I just have to mute the feed when it comes up.
Okay, they're all coming from YouTube.
Okay, yeah, that's right. Okay, I'm muted. I'm good. So what happens is they take $50 million. They go to a small town or sparsely populated area that has a waterfall or wind generation or something, energy production facility, and they go to that facility and they say, hey, we want to pay you a whole lot of money, and we want to set up our Bitcoin mining operation right close to the source of the power generation. Typically, these waterfalls and stuff, they tend to be quite far away from the population centers or solar or electric or whatever, very far from the population center. And so there's actually a transmission cost. It costs energy to push energy from one place to another. So what that means is that these power producers often have excess capacity. And so these energy intensive Bitcoin miners, they say, hey, we want to buy whatever, I'm making the number up, 30% of your electricity production capacity and anything else you can spare for 10 years. And we want you to give us a very low rate. So we will actually pay you to help you operate your, whatever it is, hydroelectric dam, solar panel, wind farm, usually hydroelectric. We'll pay you whatever, $50 million. Here's a check. And that will help you run the thing. And then you give us a fixed cost of energy for 10 years at a time. That's the game plan for these guys. So you go with places with low populations that have lots of robust energy production capacity. That tends to be Mongolia, Canada. You also want to go somewhere cold. You don't want to go somewhere hot. We need to use the energy to cool the servers. So Canada, my homeland, we tend to specialize in cold weather. And there's parts of Canada that never get warm, or they get like 15 degrees. That's like a summer day. So that's the kind of environment that they're looking for.
So I guess the summation of what you're saying is that it really comes down to the profitability of electricity, saving on cold countries, saving on heating, how much natural resource generation you can get for electricity.
Yeah, I mean, it's a race to the bottom in terms of cost per kilowatt hour. So they're just looking to lock in as low of a cost per kilowatt hour for as long as possible. You know, you or I, Ariel, we have apartments, we use normal amounts of electricity. Our cost per kilowatt hour changes over time. If it's the middle of the daytime and everyone's home on a Saturday doing laundry, the cost is higher. But Bitcoin miners don't actually want to have this. They want the certainty of knowing that the cost is X and it's going to be that for however many years in the future. Because they're running a fairly complicated setup to, you know, with very high capital input costs.
Okay. By the way, Superfarm Diamond Hands says, hi all. Hi, Superfarm Diamond Hands.
Hello, hello.
Welcome.
Good to see you.
Who else is on watching, by the way? You guys should leave a comment and say hello, and then we'll call you out and ask you where you're from. Where are you guys from?
And feel free, guys, if you have any questions about anything we're talking about as well, renewable energy, Bitcoin mining, anything at all, feel free to jump in and ask questions.
Yeah, I would also like to know from everybody watching, you know, what is your take on mining? Do you think mining is currently the amount of renewable energy is sustainable? And then I have one more question before I move on to the next topic. You know, is there a need for mining? Is there alternatives to mining?
Absolutely. So the consensus algorithm that's going to be used at some point soon for Ethereum and many, many other blockchains is proof of stake. And there's different ways to do this. There's delegated proof of stake and normal proof of stake. But in the Bitcoin mining consensus algorithm, what happens is that all these miners do these super complicated math problems, and they're like math problems that are so complicated they would take humans thousands of years if we were to do it ourselves. And that is the way that, you know, the penalty that you face if you want to mine Bitcoin is you have to pay a massive amount of money to get the infrastructure. And you have to spend a lot of money to burn electricity. The way that some other blockchains do it is they say, well, you can just pay us the money directly. In other words, you buy the tokens and that is your stake. So the proof, it's a proof of stake model where there are validator nodes and anyone can come along and buy a validator node, and it generally takes a fairly substantial investment. But the idea is you're decentralizing in the sense that you have hundreds and hundreds of validators all around the world. And it's effectively like you're having these people validate transactions and they're totally decentralized, and then it's kind of like a lottery ticket. So if there's 10 of them, 1 out of every 10 times, the person will win the reward, and that means they'll get some free, whether it's Ethereum or Tezos or whoever. So that's the alternative, and it doesn't require any mining at all. And that's just like normal computers, one server, you know, put it in the office. I mean, it might be a little bit more complicated, but there's not a need to have a whole facility.
Okay. And then Superfarm Diamond Hands, by the way, he mentions that he's in Australia. He says he almost just got stuck in a different state. I don't know if you want to add to that.
Aussie, oi, oi, oi. I hope Superfarm, I hope that you're safe. If the COVID outbreak is hope everything's okay where you are, and I hope you're staying safe from whatever else is in Australia. Probably everything in Australia is trying to kill you. There's spiders and jellyfish and stingrays and snakes, probably birds, probably frogs, snails. Everything's poisonous.
Let's not forget the people itself.
Yeah. And then there's the people. So Superfarm, you're in our thoughts and prayers. It's a very dangerous place for many reasons. Please stay safe.
No, don't say that. Our co-founder is from Australia.
I know he's still in the office, which is why I'm going so hard. But yeah. So Superfarm, stay safe. Australia is very dangerous.
Okay, and to follow up our question, Max actually came back in with another question. He says, I would assume there are collaborations within miner groups. Hence, they offer to strike a deal with energy companies and help with transmission energy. Is he correct on this?
Good question. Miner groups do sometimes collaborate. There are, in the proof of stake model I mentioned, you can like join these communities and you deposit your tokens and that they, you know, stake for you. So it's kind of like a delegated model. Mm-hmm. Miners do sometimes collaborate, but it's typically like a pretty big, I mean, what we've seen in the past 12 months has actually been mining companies go public, and then they say, well, we need to raise a whole lot of capital by selling shares in the company, and then we're going to use that capital to go and buy more mining capacity. So that's probably been the notable change that I've seen over the last little while.
Okay. Superfarm Diamond Hands added on the Australia comment saying, they shut some borders. They're killing my sex life. I was meeting someone.
Okay, well, Superfarm, we have no official company views on that, but we wish you all the best. And I know it's COVID has been tough on everyone, so please stay safe. And yeah. I think probably there's not much more we can add to that discussion, but we wish you well. We wish you all the best.
Yeah, good luck on this, Superfarm Diamond Hands. Yeah, but okay, so
shall we move on?
Yeah, sorry. So, and you mentioned that the alternative to mining, now that there's proof of stake, and you kind of mentioned about this kind of miner group, but in the sense that because they're collaborations within people, so anybody can be a proof of stake holder. Is that what you're saying? I can be a miner without having a mining.
Well, it's not mining. It's actually, they call it validating. So, yeah, I mean, there's a minimum size, right? You can't become a Tezos baker, they call them, with just any amount of money. So there are pools that you can pool your assets in with others, and then that organization who's running the pool does everything for you. That creates a reward, and then they keep some and they give you some. So, a lot of the term staking actually came from, there's no staking function with the impact token. So when we're paying interest to people for staking tokens, that's actually an expense, a marketing cost for us. But we want to incentivize our community to kind of work with us, and really excited to do we have another pool opening on early next week. But my point was that we are, so the term staking actually came from this idea of owning tokens, giving them to someone else who would then earn a reward and pay you part of that reward. So that's where the term staking originally came from.
Okay, that's interesting. Superfarm Diamond Hands actually said that he was looking at something similar to the proof of work mining. So he was saying that because they're getting all sold off in China, that he was looking at getting some cheap miners. But Hayden just mentioned that there's an alternative called proof of stake, and we're on that as well. So you don't even need to get miners in order to generate profit from your tokens.
Yes, that's right. We do have staking, although our consensus algorithm doesn't reward people for validating transactions because we're an app-based token on the ERC20 blockchain. But absolutely, people can deposit alpha impact tokens and receive a reward. So the staking function is there.
All right, now I'm going to move on to our next topic. It's XRP and the lawsuit with XRP. I don't know who else is super interested about XRP and who is invested in XRP. You guys should comment as well.
Yeah, I'm gonna look at the chart. So you want me to give you a rundown of what's happening?
Yeah, you should give a summary if you can of the lawsuit.
So okay, so this is not legal advice, and I'm not qualified to practice law in any jurisdiction, and you should not. It's okay, actually. Just not legal advice, not financial advice. So in December, okay, so let's go back to 2013. In 2013, Ripple Labs, I think it was 2013. They, oh no, it actually started in 2010 or even earlier. So Ripple Labs was this company that was founded. They decided to create this Ripple token. The Ripple token was actually created on this ledger, totally controlled by Ripple. And then many of those tokens there were 100 billion tokens that were created before anyone ever started buying or selling Ripple. And so the Ripple, foundation, there were 100 billion Ripple tokens that were gifted to the company. And then Ripple conducted a token sale, and it was alleged that the SEC has actually never said that Ripple is a security, but what they've said is, I mean, that's not part of their technical legal complaint, but what they've said is that them offering, selling this cryptocurrency to investors was a security. So that was the allegation that came out last year in December. I was short Ripple, and it went fantastically well. I don't hold any Ripple today, But yes, that was the allegation in December. Ripple has fought back, and they've been kind of slowly winning this war of attrition and actually making these little settlements with the government. So this is a back and forth lawsuit. I am running Alpha Impact full time, so I'm not going to say that I'm totally focused solely on this lawsuit, but it's been an interesting development for sure.
Oh, are you reading the YouTube comments? Is that why you're responding?
No, I'm loading the XRP USD chart.
Oh, okay. So I want to say Superfarm Diamond Hands also says that he's short to XRP. And he wanted to ask from a previous topic. He said that he is investing in proof of stake. He says electricity is too expensive in Australia. And even if you run on solar, it costs about 38 cents. So, is that a good deal for him?
38 cents is a terrible cost to mine crypto with. I mean, your competition is paying 1.5, so I think it's a terrible deal, and you should not do proof of work mining in Australia if that is your goal.
Yeah, I think that's not ideal as well. And then he said he's staking all his alpha, and we're about to launch another staking pool. So I think you should buy more alpha impact tokens so that you can stake again.
I have been buying more impact tokens. I mean, I will one day control a massive amount of the supply, but I'm still buying impact tokens because I think in the short run, well, we've got some exciting stuff planned. So yeah, it's gonna be great.
None of this is legal advice. We're not advisors.
That's correct. We're not financial advisors, and you should invest at your own risk. And investing in cryptocurrencies is highly, highly risky and speculative. And just, be careful out there.
He says that for the XRP, the one founder just got his last billions of tokens. Me and him just say the same thing. Not at the moment.
Well. The last founder, I think his name's Chris. Hold on, let me just Google this person. Founder of Ripple. He was briefly the richest person in the world in 2017. He was richer than, Chris Larson. He was richer than Bill Gates and richer than Jeff Bezos and Elon Musk and everyone in 2017. It was like 4 or 5 days. He was the richest man in the world.
Mm-hmm. So what do you think about the lawsuit? How do you think it impacted XRP?
Well, in the short run, we've seen, so I was just looking at the chart. Sorry, let me go back to it. In the short run, it's been hugely detrimental. I mean, we've seen Ripple hold on, I'm going to go to a longer time frame. Bear with me.
I remember it crashed because I was holding on to it when the SEC announced the lawsuit, and the token crashed by like 20 cents or something.
Yeah, it did crash to 20 cents. Sorry, I'm trying to find a long enough time frame chart. It's just not. I can't seem to load it. Where would have listed?
But then I bought more, and thank God I did.
Poloniex has saved the day. Okay, thank you, Poloniex, for having a historical listing that actually has the data I want. Shout out to our friends at Poloniex. We're not integrating, but happy to chat. We're not integrating now. So the all-time high for Ripple was like 3 point something. It then went down to, it looks like the low was like 7 cents. In December last year, we went all the way up to 84 cents and then crashed all the way down to 18 cents, 20 cents. We subsequently then went up in April to $1.90 something, and now we're at 51 cents. So it's kind of in a weird zone at the moment. I'm not a buyer at this level.
Well, I actually bought more tokens when it hit 18 and 20 cents, and I'm glad I did. Yeah. Nice.
Well done. Yeah, I looked at buying some more, but I decided to buy into altcoins instead. So.
Oh, by the way, Superfarm Diamond Hands says he thinks he's one of the top 50 holders of Impact at the moment. Ooh, Diamond Hands indeed.
Oh, wow. Okay. Well, we, Diamond Hands, we'll check you out on the rich list. Let us know the last 4 digits of your wallet. We'll verify.
MaxMed says to share some impact tokens, but also you should just share it with all of us too.
I think I think the staking is a great opportunity.
Yeah. Okay, so now, how do you think that the best case scenario would be for the lawsuit and the worst case scenario would be for the lawsuit?
Well, the worst case scenario for Ripple is that the government succeeds and then says, the outcome is that Ripple was in fact a security and should have been dealt with differently. People who sell securities in the United States need to comply with certain disclosure requirements. So you need to, and I'm sure anyone who has a brokerage account has seen these. They're called PDS, product description statement, and they're different in each country. But basically, it's just a letter or document saying, "Hey, you're about to buy this thing. Here's what the thing is. Here's the risks of the thing. You should make an educated decision." And if you are a retail investor, a normal investor, then that document has to have more things in it, more sections. And if you're an accredited or professional investor, it has to have less things in it. But regardless, there's a set of rules that you have to abide by. So the worst case for Ripple would be that the SEC succeeds in their legal claims and that the court decides, yes, in fact, this is a security. It was always a security. Therefore, the issuance of that token was against the law, and therefore that we're in a place where Ripple is in at that point in time, exchanges, all the crypto exchanges in the world, none of them are licensed to sell securities, and I'm excluding the ones that have no customers, like the one at DBS here in Singapore. Oh no, they do have some customers, but they're no. Hello to our friends at TBS. But the ones that have actual traction, including Binance and all those other ones, not geared to sell securities. So what that would mean is that Ripple would be delisted everywhere. It would be a race to zero. I would guess that we would see prices far below 7 cents. Eventually, I'm sure it would recover. But we've actually seen that there have been some settlements, and it actually looks like it's not going that way. So best case for Ripple would be that the SEC loses their legal judgment. However, what we're actually seeing is that it's kind of death by 1,000 paper cuts against the SEC, who are having these little judgments decided on a case-by-case basis. So Ripple is slowly winning the battle. They've made a settlement with, I think, the New York Attorney General. So we're starting to see evidence that, but this is going to be a very protracted process, and it's destined to go to the Supreme Court.
I've never heard the term death by 1,000 paper cuts. What does that mean?
Oh, death by 1,000 cuts. It means like very slow, painful way to die.
Oh gosh. I thought it was like death by 1,000 paper cuts. It sounded cute, but it's very dark.
Yeah, no, death by 1,000 cuts. It's anyway, it's something in the legal space, and I'm sure in other communities. So so that's how we see the situation with Ripple.
Okay, good to know about that. I guess the SEC loss is going to go on forever if that's the case-by-case basis, like you mentioned, And then in that case, really, the XRP can live its life and have the case just lay out.
Yeah, I think that most of the, I would say that most of the bad news was priced in December, and it's probably not going to be that volatile because of this story. I mean, this story is out there. Everyone knows about it. So I don't think there's anyone who's buying Ripple that's not aware of this, at least not if they have Google. Yeah.
Superfarm Diamond Hands is asking me to sell my XRP and buy Alpha Impact instead. And it's a very true statement. I'm already buying Alpha Impact tokens. I'm buying Impact tokens. But I want to hold on to my XRP just as a piece of history. It's really sentimental. I have a lot of sunk cost fallacy in this.
You're talking like an economist.
Okay, so more things that he mentioned. Super Farm Diamond Hands is hitting on me.
We seem to get that every time. No one flirts with me when I host these things. I'm just saying.
Well, it's because, let's be honest, our audience is mostly male. The crypto industry is mostly male, right?
Yes, of course.
If this was a female community, then we'd have a very different reaction.
Where's the female community of crypto investors? How do I find them? We need to convert them into customers.
You have to look for bit angels.
Bit angels. Okay, well, I'll keep it out. I'll keep an eye out.
Okay, and then I think we're going to move on to our last one, which is corporate ownership of crypto.
Okay. So, corporate ownership of crypto. So, just in general.
Mm-hmm. Could you give me a general summary of what's happening in the corporate space and why they're holding on to crypto suddenly?
Okay, hold on. Just give me. Okay, I'm back. So we've seen, I guess, starting in, let's see, it started a while ago. I guess in May 2020, Paul Tudor Jones and others started coming out and talking about how they were starting to acquire Bitcoin. The strategy for a lot of these guys has been to acquire the Bitcoin silently and then make a lot of noise, so the price instantly goes up. And if you were cynical, you'd actually say that they were manipulating the market to actually buy at whatever the market price is and sell at an inflated price. So this started with hedge funds, Paul Tudor Jones, MicroStrategy. Michael Saylor was one of the big proponents that did this in 2020. It's been going back many years, but it's only started becoming something that institutions started doing. Thank you, Superfarm. That's very nice of you to say.
I was laughing as I read that. I didn't want to interrupt you, though.
That's okay. That's okay. I live to be interrupted, at least on these AMAs. So corporate ownership of crypto, I guess, started with many places. I guess when I noticed it the most was with MicroStrategy. And so what you saw was a lot of professional investors, asset allocators from pension funds, hedge funds, et cetera, who are not allowed to own crypto for whatever reason. They just don't have the mandate to. They could get exposure to Bitcoin by buying MicroStrategy. And in December, January, MicroStrategy was a fantastic investment. It was, everywhere from kind of October when they made the announcement right up until January, February, it was fantastic. When Bitcoin went up, MicroStrategy went up. When Bitcoin went down, MicroStrategy went up because they had other non-crypto related news to announce. It's lost that kind of correlation. I will pull up the chart here. I won't put it on the screen, but I'll just pull that up in the background. So it's kind of lost that that luster. So let me just take a look. Yeah, so MicroStrategy actually peaked in February. And despite the fact that Bitcoin was reaching all-time highs on an almost daily basis, the price of MicroStrategy went down. It did see a bit of a spike when Bitcoin was at the top, but the price of MicroStrategy was like, it looks like 12, let's just call it 1.3K US. We go down to 850 US roughly in mid-April, and then we've dropped since there. So we're now at 556. So, we started the year at 428, and we're now, I guess, a little bit ahead. So it's I guess slightly better than Bitcoin year to date, but definitely influenced by the fact that Bitcoin took over to become the kind of exciting story that everyone's talking about. So fast forward to Tesla. So that happened in, I think it was April. Tesla reportedly.
Can I pause you for a moment? I was kind of curious about what you said about MicroStrategy. So when they held on to crypto, when they held on to Bitcoin, and then Bitcoin peaked, their price also peaked. So are you saying, like, for example, if I bought MicroStrategy shares, I would technically be buying into Bitcoin as well, right?
Not necessarily. So the audience that MicroStrategy appealed to, and the peak was in February. You have to remember that. So from October 2020 until February 2021, MicroStrategy was really one of the very few places that major institutions could get exposure to crypto without buying crypto. So owning the shares actually had nothing to do with Bitcoin, but the idea was that these people who were limited and they were not allowed to buy crypto for mandate reasons, they could buy MicroStrategy. And their thesis was, and it was correct, if Bitcoin does well, MicroStrategy will go well. They were in the news every day, buying more and more and more, issuing shares, bonds, debt, equity, everything they could do to get more money to buy Bitcoin. And so the idea was that if I'm not allowed to buy Bitcoin because my investment fund won't allow me to, I may as well just go buy MicroStrategy. So that was the peak that we saw in February. And then we had a liftoff of other institutional products. The GBTC, there's an ETF in Canada. Our friends at CoinShares in the UK and in Europe have this amazing suite of products. So there were a number of other products that kind of came up that allowed those investors to get exposure. So that's why we saw the peak of MicroStrategy in February, and then it kind of declined. Even though the Bitcoin price was rising, the MicroStrategy price was falling. So October to February, it was really the only kid on the block. And then after that, we saw other forms of speculative investment that had Bitcoin exposure become popular. So enter Elon in April with memes and Twitter and everything. And we've talked a bit before about how Elon Musk did get in trouble in 2019, not only for, I guess, smoking marijuana on a podcast. That was not 2019, that was last year. But he got in trouble in 2019 for manipulating the Tesla price. And so he's a public persona. He likes to be on Twitter. We talked last time, Ariel, in our podcast about how he's the Donald Trump of crypto. And so he said, he came out, reportedly Tesla began buying Bitcoin at some point in March, average entry price 31,000 or something like that. In April, he actually announced to the world, okay, we're allowing you to buy a car in Bitcoin. We're holding Bitcoin on our balance sheet. We want to have 10% of our balance sheet at all times be in Bitcoin. So that was a profoundly impactful situation. And that's what shot Bitcoin from, it had been hovering around the 30K level. It shot it up from there. So, and on those days, you actually could not log into your crypto exchange. So, quick shout out for having limit orders and stuff. So that was the Elon saga. Then at some point later, he said, I don't like Bitcoin anymore. It uses too much energy, so we're not going to accept it. Tesla is reporting earnings. Let's just see. Tesla earnings report Q3 2021. So the interesting date to watch, if you subscribe to the view that Tesla is influential, they're going to be reporting earnings on the 26th of this month, which is, I guess, Monday or Monday evening here in Asia. So if they sold Bitcoin during the third quarter, they will be reporting that on Monday. So that'll be something to watch. Elon has come out and said positive things. He said they haven't sold. I have no reason to suspect that he would lie about those things. But let's wait and see.
Okay. As Hayden said, they're reporting their earnings on Monday. Should check it out. And then, okay, so this is a bit of technical analysis, but Superfarm Diamond Hands, hello. He said he's been looking at this hedge fund manipulation pattern, and it's called the Wyckoff forming.
Yeah, I'll just draw it on a piece of paper for the people that are kind of. Hold on, I probably did this wrong. Hold on, let me just do this. Wyckoff. I'm not a fan of this. I think it looks made up. And when the market's bullish, people say that. Okay, I've kind of got it right. I'll just hold on. Okay, it kind of looks like this. I don't know. Hold on. Let me go back and make sure this is actually being captured.
You're saying this is the Wyckoff pattern?
Well, it's a horribly ugly version, but basically it kind of looks like this. In a bullish market scenario, people say, oh, the market's being manipulated by hedge funds. Look at the distribution. In a bearish market scenario, people say the market's being manipulated by hedge funds. Look at the distribution. So it's kind of one of those like maybe the market, I mean, crypto, I mean, every market is manipulated, right? If you have an incentive and enough capital and the resources and the whatever, it's happening. And for Bitcoin, it's easy to do that. I don't subscribe to the view that there's some like club of hedge funds somewhere who are just like, okay, let's get together and do this. And I don't believe that. Here's what I think about market manipulation in crypto. I think you can kick off a one-directional move. You can't control it with these types of things, with this type of precision. That operation is it would take billions of dollars. With other smaller assets, you could do that. Numerically, you just would need to have a certain amount of volume. So if the volume for asset X is $100,000, you could manipulate the price with $10,000. But I just don't see it happening with Bitcoin. Everything is correlated to Bitcoin. So it's probably manipulated, but I don't subscribe to the view that there's hedge funds just saying, okay, now, hold on. Now we made it here, we need to make it, oh, sorry, go down. Now we made it, yeah, anyway, you know what I'm trying to say, right? Now we made it here, now it needs to go down. Now it's here, now down, now up, now down. I don't think that there's that level of coordination. But hey, I could be wrong. I'm not a professional. I'm not a professional Wyckoff distribution statistician. So happy to be wrong. If anyone has any meaningful data, I'm happy to review. And if I am wrong, I'll talk about it here.
Okay. So I guess the judgment is out. Hayden does not believe in the Wyckoff pattern.
Well, it's like the Bart Simpson, right? Like it's like, oh, that's a Bart Simpson when it's
it looks
bullish.
like Bart Simpson's
it's an
head.
inverse Bart. Like you can't. Yeah, I don't. This pattern is so random. Like you could. And the other part that I really don't like, Ariel, is that if you have a chart of like BTC price, you can scale this axis. So like this axis where the price is going up and down, you could scale this axis to make this chart compress or come out, and you could scale it this way as well, and then you can also affect the time period. So you can manipulate a chart to do this. Yeah, so you can manipulate any set of data to do anything you want if you mess with the X and Y axes and the period of time. So anyway, sorry to rant.
No, actually, I think that you got really passionate about that, and it was great. So, Super Farm Diamond Hands, your answer has been answered. Your question has been answered. That it's very, very questionable that hedge funds would follow a certain pattern, and that would just allow people to know that they're manipulating the market. And basically, Hayden is saying that market charts can be manipulated. So, Max asks another question. He says, "Hey Hayden, quick question. Do you foresee increased institutional adoption in the future?"
Absolutely, I do. And I have to apologize. I have my next call starting in a few minutes, so I'll have to make this the last question I answer. Yes, absolutely. There's going to be a ton of institutional adoption. It's happening. It's happening quietly. You're seeing banks, hedge funds, pension funds come out every single day. So they don't talk about it, right? Because they just have a thesis. That is a long-term view. We're in a short-term 24-hour news cycle, and we see that this is happening. So there's a lot of evidence there. So yeah, and I'm sorry, I have the next call starting pretty soon. So we'll have to wrap it up for here. Okay. But thank you. It's been really lovely to be on here.
All right. Thank you guys so much. And thank you, Hayden, for explaining everything. This has been super interesting for me as well. I'm learning a lot. So I'm going to hide my face a little bit so you can see. I want people to be able to see the chart.
Oh, I think I can do it. Hold on. There, I've hidden you. So I don't think you're audible anymore. Okay. Oh, but now, hold on. I don't know how to do this. Okay, I think we both have to end our video. So what we'll do is we'll sign off. We'll leave it live for maybe another minute or so. And I think we just both have to kill click the hide on stream button. So we'll do that. Thank you everyone for joining. Namaste. Don't just trade crypto, trade with impact. And I just wanted to give a quick shout out to everyone who participated in our Antler Demo Day conversation today. Did we paste that link, Ariel?
Yes, I did. I pasted it at the start, and I'll paste it again one more time.
Awesome. All right. So thank you, everyone. I'm going to be turning off my camera so you can see the QR code. You can stay in touch with us. We'll be back right here on Monday night. Thanks so much.
Bye, guys. Hey, Super from Diamond Hands, you didn't wish me good sweet dreams. All right. Bye, everyone.